All right. Ho ho, happy holidays. Merry Christmas. How's everybody doing? Let's get this started.
Welcome to the show, it's Mortgage Talk. Grab a coffee, sit, and let's unlock the dreams you've got, the place you crave. From the front porch swing to the hidden cave. Talk about your home, talk about your plan, talk about the future where you'll stand. Your mortgage, your dream, your story to give. Let's talk about the place where you wanna live. Got questions? Here's the place to be. A TikTok live mortgage jubilee. Fix or float, we'll break it down. From city lights to your small town.
Hope you're all doing well out there. Happy Tuesday as we get closer and closer to this Christmas holiday. I've been updating my background to accommodate. I've added this lovely Christmas tree behind me and some lights to the house. Maybe you guys have done the same to your place. I know, I don't know, whatever it is this year, I'm not as into the holiday spirit, as it were, but I'll do my best. And the best I can do is this backdrop and adding a little bit of lights and things like that. Hopefully that'll be enough. Anyway, hello, my name is Kenny Murden. I'm newer to TikTok. I am not new to lending. I've been lending since 1999, and I've been an excellent resource for real estate agents, loan officers alike in structuring their deals. So any questions that they have, they reach out to me on a regular basis and say, hey, here's the scenario I have. What do you think? Like, what solutions should I be looking at? And so that's kind of what has made me over the years a really good resource, not only for them, but for you and your family. If you have any questions, real estate or mortgage related, I encourage you to go ahead and ask those questions in the chat. And I'm able to just kind of, give you my take on, some solutions that we have available. Some of the topics that we've talked about over the last few weeks pertain to buying investment property or buying your own place that you need to live in, and maybe you needed something like down payment assistance help, or if you had credit concerns, just kind of whatever the obstacles are when it pertains to buying or refinancing a property. That is really what I'm here for, where I'm going to be able to provide the most amount of value. And so appreciate you guys stopping by, saying hi, and I'm able to answer any of those questions. The other thing that I talk about here is I'm a wholesale mortgage broker. And so some of the advantages that gives you is access to reduced cost, reduced pricing. And so I don't like to just say, hey, I have lower rates, lower fees. I want to show you. And so I start each one of these morning shows with a little bit of an example. And I'll bring it up here on the display right above my head. And I'll try to enlarge this a little bit so you can see. I don't know. I'll blow it up. But anyway. The scenario that I've been pricing out recently would be an FHA 30-year fixed, and I'm doing a $400,000 purchase price with 3.5% down. It's a very common scenario that I run into, so I just wanted to throw that in there, and I'll say a credit score of 680. Again, that's just kind of like a middle of the road kind of a credit score. It's not excellent. It's not terrible. It's just kind of fair. And I'll say they're a first-time home buyer. I'll say it's here in Texas. And I'll put fees in, meaning that any lender fees that are charged are going to be tax deductible. And that's the reason why I do that. And we can talk more about that later. But let's just take a look at the pricing here. see where it's at, see if rates got better, see if they got worse since the last time we were looking at this. And so for just a little bit more than a point, so 1.1 in points, which is 1.1% of the loan amount, which puts us like $4,400, a little less than that, but that much in closing costs would get us an interest rate of 5.125 for this example. And then if you have an example that you want to get pricing on, maybe you're currently working on a financing deal, you want to just see if you're getting a good deal, you can put your information into the chat and I'll put your information here live and we'll be able to see, are you getting the best price? So that's another thing that we can kind of go over here. But that looks like rates got marginally better since the last time we looked. And guys, I took Monday off, so I had a long weekend. So the last time I took a look at this was last Friday. And as we know, as many people know, interest rates, the federal funds rate was reduced by a quarter last week. And let's take a look at the 10-year yield. 10-year Treasury yield. And see, I'm expecting, like it looks like they got marginally better. Like red is good, okay? Red means rates are coming down as it pertains to yesterday's pricing. But 4.163 is just not awesome. You can see this upward climb here recently. This is a year. Let's back it out to 3 months. So, yeah, I mean, they cut interest rates somewhere around here and they continue to rise. So, like, that's a common thing that I run into a lot where people will ask the question like, hey, I heard they cut interest rates. So what are they now that they're lower? And the federal funds rate, that does get moved around and then it stays there until they move it again in a month or two or sometimes in a year. Like they don't always change it around. But it moves around a fair amount. And that's short-term interest rates. That's not what happens here with long-term interest rates. Long-term interest rates moves like the stock market. It's actually the bond market. But they move up and down based on how many people are buying or selling bonds. And so I might see long-term interest rates get repriced multiple times in the same day. So they're constantly moving up and down like this. And so as we just priced out that FHA 30-year fixed at 5 1/8, charging a point, that's, that doesn't have exact correlation to this, but they're based on, when the bond market gets stronger and the yield comes down, interest rates will come down. So it's kind of a, in the weeds kind of a thing. But I oftentimes get that misconception of, hey, the federal government moved their interest rates, so I want to take advantage of that. The short-term interest rates are more tied or directly tied to, like, if you have a HELOC, a home equity line of credit. And I'm going to just get rid of this display for a second here. So if you have a home equity line of credit or something like that that's tied to the prime rate or the federal funds rate, then every time they change those interest rates, that is directly changing the amount of interest that you're paying on your home equity line of credit. But as it pertains to long-term interest rates, it's just indirectly associating. So if the market is expecting, as they were, expecting a quarter point reduction, and that's what they got, then it had very little difference in the bond market. Now, if they were expecting a quarter rate cut and they cut a half of a point, that would impact things where, it exceeds expectations. So there'd be an overreaction in the bond market. And that's where we could see rates coming down. But it's an indirect correlation versus a direct correlation is the point I want to make there. And thank you very much for the likes. I always forget to, again, being newer to TikTok, I forget to say, please like, share, all the things. But if you do that and if you comment, those are all things that'll help the channel. It'll help me get in front of more people to help. And so I appreciate that. If you like it, like it. If you know somebody that's needing to buy or refinance in the near to mid-term timelines, share this with them, and they'll be able to ask their questions as well. And again, if you're just tuning in, I went over this pricing scenario, and I'll blow that up for you. As a mortgage broker, I get to I'm scrolling through all of these different lenders, and I'm scrolling back up right now because I put in your information one time, and I'm able to see who is the best price for your situation. So like this CMG on the top, it says expired. So they haven't even come up with their current pricing for today. They usually come out right around like this time of day is usually when most lenders are pricing out. But I can put your information in there one time and price it against over 200 lenders. And so I want to just talk a little bit about that, where when you're working with a mortgage broker, that's exactly what you're getting. You're getting multiple, lenders kind of competing for your business, and doing so by trying to lead with the best price, put their best foot forward. But I want to caution you, if you go to the internet and you look for that kind of effect, you might be interacting with a marketing company instead of a mortgage company. And here's why that's important. If you go and talk to a place like Lower My Bills, Free Rate Update, some of these places that rank really high in Google, you'll go, hey, good morning, Crystal, good to see you. You could end up putting your information into the marketing company, and they're going to sell your information to, I think they say 4 or 5 different lenders to compete with you, to compete for, giving you the best deal. That concept is good if they were only giving it to 4 or 5 people, but that's not what they do. They sell it to 4 or 5 companies that all have hundreds of telemarketers that are going to blow you up. They're going to blow up your inbox. They're going to blow up your cell phone is going to be ringing, and you're going to get text messages. When you're working directly with a mortgage broker like myself, you get the advantage of the price comparison. So that's why I wanted to show you that list of lenders that I'm able to compare your pricing with. So you're getting that same effect, but I'm not going to blow you up. I will call you. I will text you only when you're available, and we'll have a conversation. But that way you're going to get the same value of the price comparison without having to throw your phone in the garbage can for a month, because I don't know, guys. For me, anytime I'm trying to shop for insurance or just anything, I get really leery. Am I talking to the place that is the source of what I'm looking for, or am I talking to a marketing company? Because if you're talking to a marketing company, even if you're on the do not call list, even if you're on pre-screen, pre-screen opt-out or something like that. Let me look that up. Pre-screen opt-out .com. And I don't know if I can add this into my own chat. There you go. So if you can see my chat, I put in a way to get those telemarketing calls to stop. And then obviously the do not call list, do not call, I think .gov. Yep. So I'll put that in the chat as well. So those are a couple websites to stop those annoying phone calls if you were one of the unlucky few that put your information into a marketing company and then you're getting blown up. But if you're talking to a mortgage broker, we're able to price you out. Your one scenario prices out against hundreds of lenders, and then the cheapest price goes on top. And what I was about to say is, if CMG is the cheapest for this loan scenario, but let's say you're not getting an FHA, let's say you're getting a conventional loan, chances are it's going to be a different lender on top. So if you change the loan scenario, it's not always that the one lender is going to be the cheapest across the board for everybody. It takes everything into account. It takes your personal situation, your credit score, your situation is going to be different than the next person, and so each lender is trying to compete for everything, and so it's going to be a different lender for every scenario, just about. That's just kind of the way it goes. But that's the price advantage that we're able to give you guys. And then it used to be back in the day where mortgage brokers were not able to close as quickly as the retail places, and that's been years and years since that's been true. So we're able to close very, very quickly. If you have a need to close very fast, we can get it done in a week or two. So, another thing is, let's see, if you were going through a divorce and have a 90-day late on a mortgage from 15 months ago, do I no longer qualify for conventional? Yeah, you don't qualify for conventional, but what you can do there is there are some non-QM loans that we can look at, or we could see if maybe like a government financing thing, because it's older than 12 months ago, we might be able to get that. Well, let me back up. Since it's older than 12 months, we should just run it. We run it through an automated underwriting system, and if it says approved, we're approved. So hopefully you were able to do things to like repair your credit score from, because if you have those late payments, that's going to damage your credit score. So as long as the credit score comes, 682 is good. Really good income, 2,000 debt, federal employee, 10 years. Yeah, so that, the automated system is that's going to be the pass-fail system there. But there are backup plans in case it says no. There's situations where we can get into manual approvals to get this to work. If you have to go down the path of finding creative ways to get it to work, it just means that the rates aren't not going to be as good. But my guess is with the divorce, you probably have a time pressure where you just need to get this done. And then if you end up where your interest rate's just a little bit higher, then we can try it again 6 months, 12 months down the road, and then refinance it down, which rates are probably going to be lower than anyway. But based on what you're saying here with your just kind of, your current credit score and your income, yes, we can help you in Maryland. It wouldn't be me directly, but somebody on my team would be able to help you there. And so we're in 48 states, the company that I work for. And so I am a team lead. And so if anybody that I'm working with on my team has a question, they come back to me. So the same thing would apply here. So if I said, hey, let's, here's the situation, I give them your information, they're off and running it. If they run into an issue, they come back to me and I'll make sure it gets solved for you. But this is a pretty simple scenario where we run that AUS, automated underwriting system is what that means. And as long as that says yes, that's Fannie Mae or Freddie Mac signing off on that to say that you're good to go there. And then that'll work. So the phone number is on the top here if you wanted to just text me Maryland. I'll remember that we talked, and I will get that taken care of for you. So I appreciate the comments, by the way, guys. The other, thank you very much. So, some of the things that we're talking about, again, where I like to show the pricing, the savings. So here I was showing the rates today on that FHA deal if we were to pay a point. But let's take a look if we were to get par pricing. What par pricing means is lower closing costs. So it kind of works like a teeter-totter. Let me get both my hands on the screen here. You can either have higher rate and you have lower closing costs, or the opposite. And I always give everybody the options to pick and choose what they want to do. And I'll also give you my opinion is always going to be to have lower cost, even at the expense of a higher interest rate. Why? The reason being, to get that lowest interest rate, if you are paying more in cost, you're basically prepaying a bunch of interest that you might not ever have to pay if rates go down in the future and you end up refinancing, or if you sell the house, some point, in the next few years. If you've prepaid so much interest that it doesn't even save you money to get to the back part of the loan, then you've wasted that money. If rates come down and you want to be able to take advantage of that and refinance and get that savings, but you've prepaid all this interest to get this, what used to be a low interest rate, a year or 2 or 3 years ago, then it's cost prohibitive to go ahead and refinance again. The key thing is to keep the costs down. That's my opinion. Not everybody shares it. And with that, that's a very strong opinion of mine. But even with that strong opinion, I've helped people pay tons and tons of money on closing costs because they wanted to just get that super sexy low interest rate. So it's not always my opinion that wins out. It's just I'm going to give you my opinion, and then you get to decide, because I'll also give you all the options. So here. And again, see, I changed the scenario from paying 1 point versus not paying a point. And again, remember the lender that showed up here before was CMG. Now this one here says the lender is the wholesale broker that's giving us a 5.5% interest rate with no points on that same scenario of a $400,000 FHA purchase. So I just wanted to show you kind of the cost, but also I like to do this this is my check-in to see what are interest rates doing. Oh, and thank you for the follow, by the way. I appreciate that. But I like to run these scenarios to just kind of say what are interest rates do, because I do this show every day, Monday through Friday. Sometimes I take time off. Thanks for the likes there, Mr. 1%. Good to see you. Good morning. But I like to just see what interest rates are doing here. Are they going up? Are they going down? And so I like to check in on this scenario to show you that that we truly have access to lower interest rates than a lot of other lenders out there, and we provide them to you at I guess I'll call it a discount. Here's what I mean by that. Here's how I'm able to drive pricing down. So being a wholesale broker, having access to all the different lenders and taking the cheapest priced lender and offering you that interest rate, put in your information one time, have it priced out with hundreds of lenders, giving you the best deal for your scenario, right? That's one thing. A lot of lenders do that, okay? A lot of lenders have access to that. In addition to that, we also lower our actual commission that we take, because that's another big part of the price that you pay is the commissions to pay for these we're salespeople is really all it comes down to. And if you are a salesperson and you're able to control your commission, well, the industry average, they can make a heck of a lot of money on a deal, and a lot of guys do. We don't do that. We work on volume. So our philosophy is to, it really makes it so we have to help a lot of people to be able to make enough money to survive. But that's what we're doing. We're basically helping a lot of people save a lot of money. And if you like that philosophy better, where you're going to get a better deal, and the people that love and trust that are also looking for, looking to buy a house or refinance a house, share this with them if you want them to get a good deal. Oh, hey, appreciate the whatever the heck that was on my head there. But if you prefer the way that I do business that way because that's the way I prefer business to be done. If you agree, then please follow and share this with anybody that you might know that's looking to refinance or buy a house in the next month, 6 months, year, something like that. And also, I encourage you to ask any questions. If you have loan scenarios to go through, I can certainly kind of break some of those things down. Some of the other things that we've talked a lot about on this channel are buying investment properties. And so the reason why we talk a lot about that is because I do have some creative ways to be able to pick up not only residential, but also commercial properties for investment with the least amount of money out of pocket. And I think that's a very important thing to focus on when investing is, limiting the amount of money that you have to put out into the deal. Because if you are able to pick up a deal with not a whole lot of money out of your pocket, then you're able to pick up not just the one investment property, but multiple investment properties. And you can kind of really grow a portfolio of real estate that could be, making some return on investment. That's actually something that I was talking about this morning with my wife. We're talking about, do we want to sell one of our properties or do we want to rent it out? Let's see the comment here. I'm thinking to refinance my house. I have PNC Bank and have 4.375 interest. Is it wise to do it? So interest rates right now are higher than the 4.375. So obviously you wouldn't be refinancing to just lower your interest rate, but if you're lowering your blended rate, it makes a ton of sense. Let me change the scenario here. Let's say it wasn't 4.375. Let's say you had a 2% interest rate. And it makes it even more ridiculous. Like, no, don't get rid of that 2% interest rate, right? But let's say you only have a $100,000 loan at 2% and you're carrying $100,000 in consumer debt that's like 18, 20%, like ridiculous. And the thing that I'd say is if you have that much debt, it's kind of like having the house on fire. You need to address that problem. And that the problem there, so if you have $200,000 in total debt, what's the blended rate? If you have 2% on the mortgage, but you have 20% on the other consumer debt, the blended rate is going to be north of 10%. And then, so if you're able to then refinance that north of 10% interest of that total debt, think of it as just one package, and you bring that down to something in the fives, you've saved a ton of blended rate. And so if you're lowering your blended rate, that's a good thing. The other thing is your payment is going to be drastically reduced because of amortization. So your consumer debt is not a 30-year loan. But if you roll that debt, if you consolidate that debt into your loan, then it does become a 30-year loan. And it's like, it'd be a great point if you say, but Kenny, I don't want to pay 30 years on the TV that I bought last month. That thing was going to get paid off in a couple months. Fair point. I agree with that point. So now what are our options? So another thing you can do to further lower your blended rate is you've now saved a ton of money per month. Your monthly obligations likely reduced in the scenario that I'm talking about. Your monthly obligation probably reduced anywhere from $500 to $1,000 a month in savings. So that $500 to $1,000 in savings, you can apply at 0% interest on your new loan and further lower your blended rate. If your goal is to eliminate debt, okay? Now, for me, that's not my goal, to eliminate debt. I like to use debt in a way to profit. And so if I'm able to take that $500 or $1,000 a month in budget savings and invest it and get a better return than a 5% or whatever interest rate that I'm paying on my mortgage, then that is going to compound and that's going to make me more money than I would have saved by paying off debt. So I'm not a Dave Ramsey guy. Dave Ramsey is like, debt is the worst thing ever. I'm more of a Robert Kiyosaki guy, and I'm more of like, let's put our pedal to the metal and make more money, because at the end of the day, it's asset value. If I'm going to just avoid paying a cost versus I get more money in return, what's the biggest number that, if it's 10 minus 8 it equals 2, or if I get 10 plus 20 equals 30, whatever is the largest asset value. Is that making sense? Give me a yes or no in the chat, and I can either explain it more. But I mean, at the end of the day, you have a savings of $500 to $1,000 a month. You can invest that money, is what I'm suggesting, or you can pay the debt down faster at a lower blended rate. The third option you have, if you have a budget surplus, is you can go from living on the ramen noodle hot dog budget to just enjoying life a little bit more. Life has gotten a lot more expensive for everybody post-COVID. I mean, we've seen so much inflation. We've seen so much increase. So interest rates were, a lot higher after 2022 till now. They're finally coming back down a little bit. But interest rates are just a piece of the puzzle. We also have higher asset values. So the cost of the homes went higher. The property taxes went higher. The cost of insurance is through the roof. So we're having a compounded effect for what's causing housing to be so much more expensive. But that makes it, that's probably something that caused the problem of consumer debt. So consumer debt is rising. And then, so we have this ability now with, hopefully interest rates keep coming down, but it presents an opportunity for us to, again, reduce that blended rate. If we're carrying a whole bunch of consumer debt at a really high interest rate, we can consolidate that, lower that blended rate, and then we have those options. Do we want to get out of debt? Do we want to invest? Or do we want to just live better than what we raise our comfortable spending limit for whatever makes sense. But I hate to see it when I help somebody do a debt consolidation and then in a year or two they need to do the same thing again because they've regained all that debt. Your equity is finite. It's not going to go up fast. You can always spend more than the speed of which your equity is going to be there. So I caution against living the comfortable life now. I would much rather, I'll give my opinion, as I always do. My opinion is always going to be to take that savings and invest it and create more dollars working for you. And then with those more dollars working for you, then you have the option to pay off debt later if that's what you want to do with it. But your debt is going to be paid off over time anyway, right? Those payments still are due at the first of every month. You have a grace period through the 15th before you have a late fee attached to it. But you're going to be doing principal reduction regardless. And then if you want to accelerate that, go ahead and accelerate it. A lot of people in my profession will really lean into kind of that Dave Ramsey conversation of accelerate your payments, and then you avoid paying these tens of thousands of dollars in interest over the life of the loan, and they act like that's what's going to be benefiting you the most. When, in my opinion, if you take that same money and you put it to work for you and you're compounding its effects of growth. I mean, guys, when we're talking about 30 years, play with a compounding interest rate. Here, let me pull it up. Compound interest calculator. And so I just pull one up. I think Bankrate's got a decent one. And I'll put it on the display above me. Let's see, how much have you saved currently? I want to see if it has, yeah, like these monthly contributions. Is this monthly? Compound annually. I do daily, but let's go. How much do you have saved currently? So let's say you got like, I don't know, 20 grand in savings. How many years will you save for? It says 10. Let's do that. Let's not do like the whole 30-year mortgage thing. Let's just keep a 10-year window. Rate of return. I mean, what do you guys think for rate of return? Is this daily? I know I'm getting 0.4 on a daily. Let's see, how much extra can you contribute? Well, how, per month. So we're talking about 500 to $1,000. So let's do that per month, compound daily, calculate. So this is saying estimated savings, contributed, total interest, balance per year. I think this is an annual rate. So I'm going to bring that up to 12%. Amount contributed total, so you're getting that gain there. But yeah, basically, if you're able to do a scenario where you're gaining more than what you would save by paying off interest, then I'm right. But if you don't have an investment that's going to make you more money than you would have saved, then you're better to go with the Dave Ramsey pay off the debt soonest thing. And that's just up to you. Like, let's see, this is very informative. Oh, good. Yeah, I mean, that's up to you if you want to focus more on gaining asset value versus avoid paying interest. But my opinion there is always going to be gain asset value. It's just, it's a big if, but if you're able to, gain even at the level of the S&P, which is what, 8% per year. Even if you're able to do that and then compound that effect, you're easily and obviously going to gain more than what you would have avoided paying in interest if you're paying something that's around the current rate of around 5%. So that's just kind of like obvious on its face. But if you're a person that is just a little bit more fearful and you don't think that your risk tolerance is zero or whatever, you need guarantees, not, what the stock market is going to be doing. And guys, there are ways to make pretty safe investments that blow the S&P out of the water. Like, I think I'm making, multiple 10% of interest on an annual basis. So anyway, that's why I have that opinion. Hey, thanks for putting whatever was on my head there, 1%. Appreciate that. Yeah, like, follow, subscribe, share, press buttons. I'm newer to TikTok, so I don't even know what the options are, but I appreciate it if you click buttons. If you put anything into the chat, I know that helps me as well, get in front of more people. If you have any loan scenarios you want me to price out, happy to do it. I love to be able to show and not just tell that I have really good interest rates. There's an example where there's a gal up in Minnesota a week or two ago. I forget. It was recent. But she had an active deal where she was, working with somebody. We were able to price the deal. She saved over $8,000 on her closing costs, which is amazing. It usually isn't that drastic. But, typically, if I save somebody $1,000, $3,000, $4,000, $5,000, I feel really good at the end of the day when my head hits the pillow that I helped somebody. And if I save them more than that, then hopefully they tell all their friends and family, and I'm able to help not just one person save a lot of money, but I'm able to help a lot of people save a lot of money. And that's really my goal. But if you have questions regarding, the structure of a deal, I have real estate agents I work with where they say, if Kenny didn't tell you no, then it's not a no, it's a maybe. So they'll run into situations where, a bank or credit union or somebody says that, you're not approved for a loan, and then if you hear that as a consumer, not in the industry, you think the whole industry said no to you. Like, oh, I just can't get a loan. That's not true. Like, intrinsically, it's not true, because some places will say that they have a minimum credit score requirement of X, and another one will say Y. And so if your score is higher than the one that is different, but it was lower than the first one allows, you literally might be able to get a loan just on something that simple. And there's another one I just want to tell you recently that happened here, where it was, can I say their name? I don't know. It was a big bank that everybody knows the name of this big bank. And this guy is trying to buy a house. He's self-employed, and they just probably calculated his income wrong. It wasn't Chase, but rhymes with Mel's Bargo. I don't know if that's like the loophole. Anyway, and so they probably just calculated his income wrong. And so I took the same documents that he gave Mel's Bargo, and I calculated his income was phenomenal. His debt ratio was actually really low, which is a good thing. And there was literally, like, I thought we were going to have to do something creative, like using bank statements as income, or we'd have to state his income, or I thought the income was going to be a problem, but it literally wasn't an issue at all. They just flubbed it. And so I was able to come in and just give a traditional loan with the same, the best rates and fees and everything. So, I would just say, if you have something more complicated than a W-2, and even then, who knows? Maybe they're just having AI do everything nowadays. I don't know. But it helps to have somebody that knows how to do the math and understands to look at I saw Crystal jumped in here as well, Mr. 1%. I said hi to her earlier as well. But anyway, it helps to have somebody know how to do the math, right? Like, I'll be able to look at your tax returns and understand, like, where the money is coming from and what the write-offs are. Because I'll look at your credit report, and if you have something in there where it's being charged against your income, and it's also showing up in your credit report, I'm able to make the argument to the underwriter to say, you can have one of those because it's only one expense. Let's say it's a car payment. If you're going to have the car payment in the credit report, and you're also going to have it taken away from their income in the tax return, I say you only get one of those. You can't have both because they're not paying the thing twice. So I'm able to argue that with an underwriter, and the underwriter's like, "Oh yeah, that makes sense, Kenny. Thanks for pointing that out. Let's go ahead and keep it in the credit report. Let's keep it as an expense because that's what it is. But let's go ahead and not deduct it against their income because they're actually getting that income and they're making the payment." So that's just an example of a way where I was able to use my own gray matter to take a situation where there was marginal income, and I was able to successfully argue for a self-employed person to be able to get the house that they wanted, with a little bit more income. So that just little things like that, guys. I mean, that's just the stuff that I do maybe better than others. I don't know. Separates me from a few other folks that are out there, and I'm happy to do it for you. So I mean, if you have any questions, different loan scenarios, we're a little bit out of time today, but I'll be back tomorrow and the days after. I'm still kind of like contemplating, am I going to be out of town for the Christmas holiday or not? Who the hell knows? But if I'm on here, stop by, say hi. If I'm not, hope you and your family are having a Merry Christmas, same as everybody else. So, Talk with Kenny. Are we doing Talk with Kenny today? Nobody showed up last week, so I don't know. I mean, I can go on, but it's not been a main focus. I'm actually, Mr. 1%, I'm actually working on creating another TikTok channel that will be a little bit more of recruitment only for real estate agents and loan originators. And I'll just have a background that's going to reflect something like Watch Me Work. And it'll be for the purpose of training loan officers how to do the Z-Lister method. So I'll be able to do the Z-Lister method, get a whole bunch of leads going, show how I'm able to increase my real estate agent referral partners. And so I'll be able to actively do those benefits for myself and my business while I'm teaching it on the camera. And I'll just have my cell phone on speaker, and you'll be able to hear what's going on. And then I think I'll grow Talk with Kenny on the weekly thing as well, where I can do the coaching to say, hey guys, this is what I'm doing. You can follow me on TikTok and you can see what I'm doing. But the weekly thing will be, why am I doing it the way that I'm doing it? And so that's the idea for the next channel that I'm going to be growing there. And that'll have I love the dual purpose for being able to be in front of an audience for recruitment, but also be able to answer any questions that people might have in the chat for loan programs or whatever, because it'll have my NMLS, it'll have something mortgage related. So, I might get some interaction that way as well. But that's what I'm building for 2026. And I'm also got landed in my lap here is a bunch of AI stuff. So I'm unpacking a bunch of AI stuff that I might be able to add into thanks for the likes. I might be able to add into the mortgage space. I might be able to just add it more broadly to other industries as well. I don't know if you remember Phil, but Phil reached out. He built basically an AI thing where he can easily build websites, but it replaces a CRM, and it's all like just its own standalone deal. It's not go high level. It's not like a system that exists out there, and it's AI constantly, where the website is self-improving SEO, and the CRM is being a lot more personal to. It's more individualized. It's not so boilerplate as the old way of doing CRMs, where it's like, hi, first name, body of message, salutation. It's not like that anymore. So it's going to get better and better. I love to see the technology stuff, and the more I can stay on top of it, the better I'm able to help the people that I serve. And so I'm definitely going to be taking a big part of the holiday break to bone up on, the new advancements. So definitely expect to see my AI prowess grow here the next week or two. So that'll be fun. But for everybody else, I mean, we're now after 11 o'clock, last call for comments, questions, scenarios, all of that, because I did get on late. I have a very flexible schedule. It's called I'll get on whenever I damn well feel like it. So it's typically 10 a.m. and 4 p.m. I haven't been doing the 4 p.m. at all this month. And I was like 15 minutes late today because I was having some technical issues. Shelly, good to see you. But yeah, that's basically what happened here today. Another thing that I was thinking about is rather than get on right at 10 a.m., is I should get on at 10:03, and that would be an inside joke to me and other loan officers out there. Only we know what a 10:03 is. So, and that's been kind of my joke where I don't have set office hours, but I do work from 10:03 to 10:03. It's just, again, it's being a dad, having dad humor, and being doing some inside jokester stuff there. But with that, I don't think we have any other questions coming in here. So I'm going to sign off, guys. Enjoy the rest of your Tuesday. I was not planning on doing a talk with Kenny today. So if I get an email saying anybody showed up, I might jump into it. Otherwise, I'm just going to let it go for now, and then I'll rebuild it in 2026. Neil says, I want to my family to, I think you want to move your family to Switzerland. Help me. If you are trying to, assuming you're in the States and you want to move out of the country, sounds like you just need a real estate agent to help you list your house. And, I don't do a whole lot of foreign loans. I've never done one in Switzerland. I'd be curious to learn how to do it. And 1% is asking, are you moving them from Switzerland to here, or are you like getting the heck out because you're here and you want to get out? I've heard more people trying to become expats than new ones coming in, but that's why I was assuming you're trying to leave. If you need a good recommendation on a listing agent to help you sell your house for, top dollar, that kind of thing, I have some ninja tricks that I'm able to do anywhere in the country. I'm able to find the ones that are best suited to help you. I even call them up and have a conversation with them prior to making the introduction to you to make sure I kind of have them vetted out. And so if you want that as a free service to you to find the person that's going to, serve you best in your neighborhood, anywhere coast to coast, sea to shining sea, definitely reach out. My phone number is on the very top of this live. Feel free to call or text. Maybe text the words "help me move." Will remind me that it was you that wanted to reach out, and I'm happy to do it. But with that, I was signing off here, guys, so I'm going to get on to the multitude of other tasks that I've been putting off for the last couple of weeks here, and I hope you guys have a productive day as well. Make it a wonderful Tuesday. Looking forward to seeing you guys on Wednesday, unless I'm back on this afternoon, which, again, who knows whether or not I feel like it. Appreciate your time. Appreciate the chats, and we'll see you another time.